Hello. Welcome YouTube, welcome Trade Pros, welcome traders. Hope everyone is doing well today. It is Wednesday. Yeah, Wednesday, uh, March 15th here in the markets, and what a turbulent week we've been having so far. So a lot of the news has been circulating around these financials, right? The financial sector in terms of banks, how those banks are progressing. Seeing further news coming out of banks, we have mainly Credit Suisse, which is at the top of the headlines today. Credit Suisse is down about 20% here pre-market, making fresh all-time lows, it would seem. Let me just take a look at where Credit Suisse is trading right now. Ticker symbol CS, trading at $1.8485 right now pre-market. Very, very low. If we take a look at this all-time, it IPO'd at let's see. It IPO'd at about $23.95, right? The year I was born actually. So it IPO'd at about 20, 22, 23 bucks, whatever I just said, and now is at 181 here pre-market, making fresh lows. So this thing is down pretty aggressively here pre-market as we had some news surrounding it. The bank's top shareholder ruled out offering further financial assistance to the lender. And Saudi National Bank Chairman Ammar Al Quderi cited regulatory concerns as the reason behind not being open to injecting more capital into the bank. So naturally, that's the top shareholder. Credit Suisse also disclosed a material weakness in its reporting procedures yesterday, which led to concerns over the bank's internal controls. And this kind of spiraled and escalated, even halted here pre-market, restarted trading. Restarted trading and has resumed into record lows. So there could be some liquidity issues in Credit Suisse as well. That's something that's been circulating the news over the past week. And banks just continue to get battered. So we also have a group of Democrats that are proposing a bill to restore the banking regulations that were undone by former President Trump. And the proposed bill seeks to repeal a law passed on a bipartisan basis in 2018 that eased the Dodd-Frank regulations on mid-sized bank by increasing the too big to fail threshold to 250 billion in assets from $50 billion in assets. So the War and Border Bill would roll back the threshold pertaining to enhanced capital requirements. The Federal Reserve is evaluating tougher rules for mid-sized banks after the failures of Silicon Valley Bank and Signature Bank, and is looking at a tougher capital and liquidity requirement that could beef up the annual stress test that assesses banks' abilities to weather a potential recession. Meanwhile, U.S. regulators are investigating the failure of SVB, including potential misconduct by officers over insider sales of stocks. So no one at the bank has been accused of wrongdoing, and it's possible that no one will be charged. But in addition, the DOJ investigators had been investigating Signature Bank's work with cryptocurrency-related clients before the bank shuttered. Now, with that, there has been purchases of over $20 billion by Goldman Sachs from SIVP assets, SIVB, right? That's the ticker symbol assets in the past weeks. There's also been apparent shelf offerings from names like Wells Fargo that have been coming across the web. So we've seen a lot of bank information. And the latest news is that the Federal Reserve is now pricing in the potential of 100 basis point cut by the end of December of this year. So we take in what's going on the macro front. Everything is looking abysmal, to say the least, right? From the financial sector, everything just imploding and going everywhere realistically. But from a technical perspective, it looks like prices are still sustaining. Now, we can make an argument for most cases, but it seems like the macro sense is naturally to the downside. I'm just checking in here, and the rates increase, the probability chance increase that the Federal Reserve will not cut rates or hike rates, stay rates as they are in this coming meeting that is next week by a decent bit. So the chances that we stay where we are in these rates is about 45%. The remaining 55% is that we hike 1 basis point. So that's some pretty crazy stuff there. To add to that, right, we're still in an inflationary environment. Yes, inflation is cooling, but at 6%, right, it seems like hiking is one of the main ways that's been subduing this inflation. Now, if that is cut down, this inflation cycle becomes cyclical, where we do increase inflation aggressively again before it does come down, because the Federal Reserve and everyone is pretty much focused on these issues in the financial sector right now. that are trying to sustain this market as is. There's a few things to consider here because the tech side of things is very, very strong. It's only the banking sector that's really dragging things down, which is a major, major issue. Don't get me wrong, but tech is still holding out. So I think there actually could be even some dip buying, even if all this news is abysmal. I think there even could be a bear market rally from this before we see another potential leg to the downside. But I don't think that we see that much crazy downside if we haven't even seen a limit down day on all this news. Unfortunately, it would take more of a quote unquote collapse to see that downside move. So in today's levels and ideas and areas, there's a few things that I do want you guys to watch. IWM being one of them. IWM is the Russell, right? You have to keep eyes on the Russell because it is pretty close to making lows or coming into the lows of the year. It's sitting at 171. That is a key marker on the Russell. Seeing if we can actually hold that distribution low area. If we start passing through that, it's going to be downside for the equity market. Another thing is if you take a look at tech, like I was mentioning, tech is still pretty strong. Okay, Apple is gapping down naturally, but it's still holding very strong. Unless Apple can actually see aggressive downside, I don't think that this next down move is going to hold out for very long, right? Whatever tech side you look at, they're still sustaining fairly well, right? They're not like pressing into highs or anything, but even yesterday, the day before, right, we've had good, strong rallies in individual tech names, no matter which one you look at, right? So just something to keep an eye on. If we look at the S&P 500 futures today, some of the levels to give you guys, I am watching very, very closely what happens in and around that 68th region, 38, 68, right? That's a huge, huge support area down into the 70. But overall, I think there could be a potential buy stop run that starts this move. That's been the case for the past few sessions. Every dip just gets bought aggressively. There is a single print around the 95s, and 39.05 on the futures is a key level. If we rebid above 39.05, I think the shorts are off and we start looking for this upside move realistically. The shorts, they've come down a lot over the overnight session, but they're going to have to start hammering right off the open, and I just don't see that happening. I think they do a little buy stop run, whatever late shorts come in get stopped out, and then we try a little move to the upside and see how that shapes up. So I'm leaning towards a little move to the upside to start the session, right? If we fail and we fail to get above 85, that's fine, right? Just look for that downside rejection. It's a little harder to call this positioning and this bias, but I can see the potential for that buy stop run, the potential for it. So with that being said, today, pretty much at the close of the market at 4 p.m. Eastern time, we're going to be doing a Q&A live here with you guys. Bring your questions. I'll bring some answers, and we'll talk about the new futures course that is getting launched at TRADEPRO Academy. I'm going to break it down, show you what's involved, and we will chat about it. I'll show you some cool stuff about futures. So thanks for watching. I hope to see you later on today, and let's do this again tomorrow.